Good morning and welcome to Business Morning on Channels Television. It's the beginning of a new week. We look forward to a great and profitable week.
Yep.
I'm Ini John Mekwa.
Profitable indeed. I'm Ladi Williams. Thank you for joining us. Let's look at what's happening in the oil market. Oil prices fell, extending losses from Friday after the U.S. dollar jumps to a 3-week high and the U.S. rig count rose, though nearly a quarter of U.S. Gulf of Mexico output remained offline in the wake of 2 hurricanes. U.S. West Texas intermediate crude futures fell 30 cents to $71.67 a barrel, while Brent crude futures fell 27 cents to $75.07 a barrel. Oil fell with the greenback near a 3-week high following a rally on Friday on better-than-expected U.S. retail sales data. According to the Bureau of Safety and Environmental Enforcement, 23% of U.S. Gulf of Mexico crude output, about 422,000 barrels per day, remained short as of Friday.
And back here in Nigeria, on Friday, the Central Bank's Monetary Policy Committee maintained its key lending rate at 11.5% with the asymmetric corridor of plus 100 and minus 700 basis points around the MPR. At the end of the meeting, which was the 5th for the year, the MPC also retained the cash reserve ratio at 27.5% and liquidity ratio at 30%, in line with a lot of analysts' expectation. A lot of things actually that come out of that meeting. Ladi, remember we talked about the issue of Forex, the issue of Forex.
The
CBN governor, the CBN governor was very passionate about that, you know, and of course he also noted some of the achievements and the possibility or the positive outputs or growth outputs for the second quarter and all of that.
And, you know, the last meeting, we had a bombshell. And actually, this meeting, too, we also had another bombshell.
I was expecting it. I mean, because, I mean, with the rates now, the value of Naira is getting so close to 600 Naira, you know, it will make the news.
And we must not talk about that rate. But anyway.
I think we have to talk about it. We can't help it. But anyway, so a lot of our discussion today will be on that, some of the outcome from the meeting on Friday, the 2-day meeting. But before we go into that, the CBN governor said that financial markets regulator is determined to eliminate activities of illegal forex traders, which may have been inadvertently encouraging insecurity in the country. A very worrisome observation by the CBN governor. But let's listen to the CBN governor now.
8 weeks ago, the governor of the Central Bank of Nigeria came down hard on bureau de change operators, putting an end to weekly allocations and sale of foreign exchange over illegitimate transactions. Consequently, the regulator directed banks to commence the sale of foreign exchange. It seems like that matter is far from over, as the Central Bank, through the Monetary Policy Committee, insists that the only recognized foreign exchange rate in the country is through the import and export window.
We have unwittingly supported activities of those who illegally buy foreign exchange from this illegal market, carry them in aircrafts out of the country, and go to buy arms and ammunition, and bring them back into the country and conduct crime, whether it is Boko Haram, whether it is kidnapping, whether it is all sorts of nefarious activities. We, Central Bank, take our country's dollars and sell to people to go and buy arms and ammunition to come and hurt us. That is what we're saying that people want us to continue to do. We cannot do that.
Just before this warning to Nigerians to only use the banks for their forex transactions, the Monetary Policy Committee put all its parameters on hold to allow for economic recovery.
The MPC made the decision to hold all policy parameters constant, believing that a hold stance will enable the continued permeation of current policy measures in supporting the recorded growth recovery and macroeconomic stability. Committee therefore decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted as follows. 1, retain MPR at 11.5%. 2, retain asymmetric corridor at plus 100 and minus 700 basis points around the corridor. And retain the CRR at 27.5%. 4, retain liquidity ratio at 30%.
Members of the committee are optimistic of a rebound in the economy, just as they urge the government to address issues of insecurity to boost food production and investment in the country.
Okay. So at the end of the Monetary Policy Committee meeting for September, the Central Bank Governor emphasized the regulator's determination to launch the E-Naira on the 1st of October as the country will celebrate her 61st independence. He also talked about how it will work and why the CBN engaged the Beat Inc., which is a foreign company. This has generated a lot of conversation, Lade, you remember. People are saying, well, we do have Nigerian companies that can actually handle this, so why do we have to go outside? And, you know, we're still talking about managing FX.
Exactly.
And this is going
national security, that's another one.
Exactly.
Yeah.
So we're going to discuss more about this. Joining us from our Abuja studio, Mr. Musa Jimo, Director, Payment System Management Department of the Central Bank of Nigeria, to throw more light to the E-Naira and, of course, other issues. Good to speak with you, Mr. Jimo. Good morning.
Good morning.
Great. So what should Nigerians expect from the 1st of October? We're told that the E-Naira will be launched. What should we expect to see?
Okay, thank you very much. In a very simple term, I think Nigerians should expect something great for this country. Nigerians should expect the launch of E-Naira, which is the digitalized form of the physical Naira cash. Nigerians should expect a march to prosperity, a process by which we can deepen our financial inclusion, by which we can bring more people into the financial space. Nigerians should expect that they're going to have a payment system that becomes more efficient, that would cost less, that becomes more resilient in terms of the infrastructure that drives, you know, the E-Naira. So all in all, I think it's a prosperity for Nigeria and also for Africa. Nigeria is actually leading the rest of African countries to launch the central bank digital currency E-Naira. So it's a prospect for Nigeria and it's a prospect for Africa.
All right, Mr. Jimo, but can you, paint a picture on how the E-Naira is actually going to work in Nigeria?
Okay. There are several processes that are involved. First, I think we all need to understand the fact that the E-Naira is just an electronic representation of your physical Naira. And so it's going to be one-to-one. There is no arbitrage. If you hold one E-Naira, it's equivalent to your physical, 1 Naira. And the processes that are involved is that, first, central bank is going to be the central authority in terms of the minting and the issuance of the E-Naira. So that responsibility rests, squarely with the central bank. Central bank will issue just the same way, the physical notes and coins are issued. Central bank will issue the virtual one. And then the banks, the commercial banks and other financial service providers will be involved in the distribution. And so as a consumer, as a citizen, as a Nigerian, or as a bank customer, what I need to do, starting from October 1st, is to have a wallet created, similar to the way you open a bank account. Nigerians will be expected to open their e-wallet, the E-Naira wallet, where they can keep the E-Naira. So first thing, the banks will be involved and, other service providers. So October 1st, we expect everyone to take their phones and go to, there are two basic operating systems, very popular operating systems used by our phones. It's either the Android or, the iOS. And so if you're an Android phone user, you just go to Google Play and download the E-Naira, app. And if you're an iOS Apple user, you go to the App World and download the E-Naira app. Once you do that, there are certain instructions that will come with it upon activation, and then very simple instruction that you go through in connecting to your bank to register or create an e-wallet for you. And so once the e-wallet is created, your bank will do, once you initiate the creation of the e-wallet or opening of the e-wallet, your bank will do some KYC, some kind of background check, just to be sure that you are who you say you are. And upon that, the system will create an e-wallet for you, the E-Naira wallet for you, which is similar to the bank account that you used to have. And upon that, then you need to fund it. Just like you fund your account, you then need to fund it. And it's also very simple. Through the same app, you can actually go in there, instruct your bank by choosing a bank, and then indicate the account that you want the money to be moved from to your E-Naira wallet. And all this will be done seamlessly. You also have an option of walking to a bank branch, and later, as we move along, the agents' outlets will also be open for you to be able to walk to, hand over your cash, especially for those that are underserved, hand over your cash, and you have it digitized into an e-wallet. So it's going to be a very simple process that will be highly guided by a lot of automated process within the app. And I think every Nigerian, especially those that already have a bank account, will be very easy for them to do that. And for those that do not have a bank account, the agent outlets and the bank branches are there for them to approach so that they can be guided through in terms of how to open the e-wallet. Okay, well, with other digital currencies, the holders have, kind of full control over their wallets. Will it be the same process with the E-Naira? Yes, you have a full control. It's your wallet. It's going to be protected with, PIN, with your password and all that, whichever secret code that you use, no one can access your e-wallet except yourself, which is why those kind of background checks will be needed. Creation, checking that, your identity, either you're using your NIN, National Identity Number, to validate yourself, or you're using your bank verification code number to validate yourself. And when you do that, you'll be given an opportunity to select a secret code, or your password or your PIN, with which you safeguard your wallet. And so it's only you that can access it, just the same way your account, bank accounts are protected. But this one is coming with a very strong encryption mechanisms that makes it very tight for anyone to hack, because of the technology upon which this E-Naira is going to run, which is, the blockchain.
Okay, so sounds interesting, and it should be reassuring. But, I mean, for an average Nigerian, I'll say, why do I need to go through this? Because already, when you talk of financial inclusion, we have the e-payment system, we have the debit card, we have the POS and all that. So why should I bother to do this? What advantage do I have?
Cost. Number one advantage is about cost. Second one is about security. And the third one is about diversification. Let me start from, the cost. Today, the cost of indent, the cost of producing the Naira and the coins, the physical notes and the coins is very high, and all that. It costs money to print money in this country. Now, with the minting of the E-Naira is electronic, so it doesn't cost you. Cost of indent will actually come down. That is a cost, that will basically go down, and that will translate to the advantage that the users will take in terms of the fees that they pay. So by the time we are out, and very soon we'll be out there, educating the masses in terms of what the guideline and what the do's and don'ts of the E-Naira will be. You will see that transaction costs have actually come down greatly, and this is because of the cost that we have also, brought down in terms of the printing of the Naira, and that cost also transmits, to the underserved, the underbanks. One of the major deterrents of financial inclusion is the high cost of financial services. People keep their money in their homes because they think that if they keep money in the bank, it's very... And that has been the driving, policy across all CBN regulation on cashless policies and all payment system initiatives to make sure that we bring down the cost of financial services. So once we bring down the cost, it will be an attraction because it will cost you less to use electronic form of payment to make your transactions and all that. And also the cost of digitizing and the cost of even keeping your money. That's one. Two, efficiency is brought to bear. Like I told you, it's going to run on a technology that is very, very fast, that is very, very efficient. Intermediary have been reduced in terms of the number of entities that are involved when you want to do, for example, a funds transfer. So efficiency has been brought to bear. You also have another advantage still on payment system efficiency and resilience. As we had today, we know the kind of technology and infrastructure challenges that we have, whether it is telecommunication or power and all that. And so sometimes our transactions do fail. Yeah, they do fail. And then dispute arises. This is going to run on a technology that it's almost 99.99% available because the technology will run on a principle that technology people call atomicity. So a kind of system where transaction is either 100% consummated or 100% fail. So there is no partial execution of transaction. It's either it's successful or not successful. You won't be having what you popularly know as dispense error. So it brings that kind of resilience to the entire system. And the fact that the liability of this money, the E-Naira wallet, is on CBN, directly on CBN, which is similar to the cash you hold. The cash you hold today, it's the liability of the cash you hold today rests squarely with the CBN. And so it gives Nigerians the opportunity to bank with CBN, so to speak, if you want to. But more to it is about the cost that it's going to bring. It's about the pervasiveness of the system and the fact that we are also opening up the payment system terrain, adding more options by which you can make payment. But I want you to know that the entire system will still continue to be resilient because this system is going to integrate with the existing payment infrastructure, existing banking infrastructure, which is why we are running a two-tier model where central bank has its own specific role, and then the banks also will have their own specific role. But one thing that I want an average Nigerian to take away is that the cost of performing financial services will be drastically reduced under this arrangement.
All right, Mr. Jimo, let's look at acceptance now. Do merchants have a choice not to accept the E-Naira?
Today, anywhere you present Naira to pay, compulsorily it must be accepted because that's our fiat currency, right? And so the same way Naira is accepted that you can't reject it is the same way E-Naira must be accepted. Anywhere in this country that E-Naira is presented, it must be accepted. So merchants must accept E-Naira as a means of payment.
Okay. All right. So, there's also been talk about, your recent partnership with Bit Inc. for the rollout, it being a foreign company and all of that. There's been concerns and, talk about why not using a fintech company here in Nigeria. What's your response to that?
Well, it's all about what the objective is. Central bank digital currency is not something that every country has implemented. Like I told you, we're basically trailing the blades in Africa. Nigeria is about the only African country that is doing it. And so many countries, even advanced countries, have not touched it. You can only talk of China and the Bahamas, that have actually trying to do something very serious on central bank digital currency. So the technology is not everywhere. You need to be very sure. You can't come and use Nigeria as a testing ground and then you say, oh, if it works, well, if it doesn't work. You need to use entities that have actually done it, that are sure of it. There are so many narratives about central bank digital currency, so many technology that people are presenting. The fact is that which one has worked? And so what we did is to partner with an entity that has done it, that has that experience. But because we know that eventually the system is going to run in Nigeria, we also want to domicile certain responsibilities here. And so the arrangement is such that you're going to have a Nigerian incorporated company, call it Bits Nigeria, who will basically be running the system. So eventually it's going to be a Nigerian company that will be running it. And then you are going to have, at the end of the day, some Nigerians helping to manage this thing. So I don't consider it as a foreign company per se. The technology may be coming from foreign country, but in terms of operation, it's going to be managed by Nigerians.
Well, that sounds really interesting and attractive to Nigerians, and we do hope that we would see that implemented soon, so that we don't have Bit Inc. running for years and all that. But another area of questioning is, you did say this is a technology-based platform, and also that merchants will be compelled to accept it, because like Naira and everything. What if I go to a merchant and the person does not have the technology or does not have the data, to do this? Then, what do I do? Because this is one problem that is facing financial inclusion in the country at the moment. So that seems to be even more technology driven. How do you spread it when the access to the technology and data and all this is a challenge?
Well, E-Naira is a journey. We don't expect that October 1st, everyone in Nigeria, all the merchants and all the business outlets in Nigeria will be accepting E-Naira and all that. We don't even expect that, come October 1st, every Nigeria will have E-Naira. It's a journey, and, we continue to go. Recall that there was a time in this country when you have to practically beg business outlets, merchants, market owners, and all that to accept POS, to accept card, right? we used to beg and all that. But we've come to a point now where the market owners are even asking you to come and give them POS terminal. So it's a migration. The merchants will soon begin to see the benefits. They themselves would ask. They are going to ask for E-Naira because they will see the benefits of E-Naira. There are so many benefits that accrue to them. Cost of acceptance of E-Naira is going to cost less. They're not going to have so much charge. Their total sales is not going to be discounted so heavily and all that. Yes, technology is a problem, and signals can fail and all that. But these are issues that we contend with every day. The same way we manage our phones to make sure that when we want to make a call, there's signal, or we stay in a location where we can get signals. It's the same way that the merchant devices will also continue to get signals. And the incentive that they are going to get from accepting E-Naira will compensate whatever it's going to take for them to maintain those acquiring devices or systems that they will use to accept payment from the individuals. I think it's going to be a win-win, both to the consumers that are spending E-Naira and the merchants and business outfits that are accepting E-Naira.
Okay, and you did say that one of the objectives is to increase revenue and tax collection. How do you hope to inculcate that into, the running of the E-Naira?
Well, it's just basically about bringing about transparency, making sure that everything is very transparent. Transactions are seen, and whatever a transaction that is taxable or vatable, they are seen. It's about making sure that everything that qualifies to be vatted or to be taxed is seen within the system. That's the only thing. And that kind of transparency is what any government needs anyway. And I would imagine that the institution responsible for tax collection, it will be happy to hear this, because basically you have 100% access, to see the data that is working. And in any country that is very serious, transparency about business activities is what brings about prosperity. And so if you have a technology that will make it very easy for anyone to see that, oh, this is the transaction that we have conducted over the year, not only does it give us statistics that will help us in monetary policy activities, it will also bring about the transparency that the other agencies need in terms of doing their own job. That is from that perspective that we said it will help increase tax collection.
All right. Thank you so much, Mr. Musa Jimo, the Director of Payment System Management at the Central Bank of Nigeria. Thank you so much for your time. And we're certainly counting down to the 1st of October to use that E-Naira.
Oh, my wallet.
Yeah, get our E-Naira wallet.
I hope you're going. I hope you're going to download your wallet.
Oh yes.
We're counting down. We're just. Thank you so much. Enjoy the rest of your day.
Just get set. Just get
All
set.
right. Okay. Yeah. Well, so one of the decisions that came out of the 5th MPC meeting, which is still focused, is, of course, the management of FX and the impact or the expected impact of retaining the rate. That will be after the break. We'll have that discussion. So join us. It's Business Morning on Channels Television.
Welcome back. Now to our next conversation. Now, the monetary policy meeting ended September's meeting with a hold decision. That means the benchmark interest rate retained at 11.50%. The asymmetric corridor remained at plus 100, minus 700 basis points around the MPR. And the cash reserve ratio retained at 27.50%, and liquidity ratio retained at 30%. Forex management was also a major part of the discourse at the end of the meeting, and we'll delve into some of that with the head of research and strategy with Chapel Hill Denham, Tajuddin Ibrahim. Great to have you on the program. Good morning.
Good morning. Thank you very much for having me.
Yes. So it's another hold decision from the MPC. The reason for this, according to the CBN governor, was not to disrupt the growth trajectory. Is this was this your expectation too?
Yes, it is in line with our expectations, because if we consider the key indicators or factors for consideration, the first of them, I think, is COVID-19. One realizes that we still have, sort of several variants of that pandemic. And if we take a look at vaccination in Nigeria, we are still below the level that we should be. Less than 1% of the entire population is currently vaccinated. So which means that COVID-19 is still a major downside risk to the economy and the country as a whole. The second factor in my mind is what we are seeing on the economic expansion front. In terms of economic growth, the Q2 number shows a recovery, but that recovery is a gradual one. So it makes policy sense, let me put it that way, for the CBN to hold those parameters unchanged. Take a look also at inflation. We noticed that there was moderation in inflation, and that indicates that there is little or no pressure for the Monetary Policy Committee to consider increasing interest rate. And so if we also take a global view at the situation, what we find is that global economies, global central banks are currently normalizing monetary policy, but without necessarily increasing interest rates, particularly in the US, for instance. So the decision of the CBN to hold all those parameters constant is in line with our expectations based on all these indicators that I have talked about.
Inflationary pressure remains mixed. What does this mean in the face of the continuous drop in inflation figures in Nigeria and a lot of views that it's not capturing the reality on ground?
So if we take a look at that statement, one way to understand it is to take a global and also continental view at that statement. Indeed, inflationary pressure is mixed, considering the fact that we have some economies around the world where inflation numbers are higher, and we have some where we are seeing moderation. Let me give you an instance. In the US, for example, the inflation number for the month of August is lower compared to the month of July. But in the UK, they had higher inflation in August, versus the level that they had in July. So in China, they had, lower inflation, in August versus, what they had in July. So it is kind of mixed. And we bear in mind also that we import, from these countries. So whatever happens to, their inflation, is a concern for us, because it speaks to imported inflation into Nigeria. So that is why the CBN, said that, inflationary pressure in those countries are largely mixed. And if we take a look at us in Nigeria here, we are down to 17.01% in August. It sounds positive, but when you take a look at it from a peer comparison perspective, you look at other African countries, you will realize that we are still higher than Kenya, we are still higher than Egypt, we are still higher than Ghana. All these three other countries have inflation numbers that are below 10%. Ours is still 17.01%. We continue to face structural challenges that have not really helped us to have a moderation in inflation that will accommodate the 6 to 9% target of the CBN. So broadly speaking, it is indeed a mixed development in terms of inflationary pressure across the world.
All right, so improvement in the manufacturing and non-manufacturing purchases management index was, applauded, but it remains in negative territory below the 50-point. What does this indicate?
So what it indicates is that we are seeing economic recovery, but it is not as much as we would have loved, for it to be. The momentum is not as strong as for us to say that we are completely out of the woods in terms of economic growth. The PMI, the Purchasing Manager Index, is a leading indicator for people to understand what is happening to the economy. If it is 50 points or above 60 points in particular, then we will be talking about strong economic expansion. But considering that we have it below 50 points at about 49.6 points as published by the CBN, it means that we are not seeing much economic expansion as we should see, as a country. Even though we had it, improving from the level that, it was, the previous months, we are not there yet in terms of, the expected recovery of the economy. So in the coming months, what we'd expect is that, that indicator should expand further because of the accommodative monetary policy stance of the CBN, the support, from the CBN to businesses and also SMEs in general, and also the fact that we are going to see inflows of US dollars that will allow more businesses that, do business of imports, to have access to US dollars and do their business. So on the back of all those, we should see better PMI numbers in the coming months, in my view.
Okay, so foreign exchange management has been described as the big elephant in the room in recent times. The CBN governor has affirmed the determination of the regulator to continue in its line of action to cleanse the space of illegal dealers. But analysts say the issue of pricing and supply are core to solving this challenge and not about, like stopping supply to BDCs and all that. What's your view on how to solve this FX problem?
I think we should take a two-way view at that issue. The first is, let's take a short-term look at it. In the short term, one can easily argue that, all that we need in that market is increased liquidity, and that should, to some extent, support the stability of the currency. But at some point, we will still run into trouble because our FX reserves are going to go down on the back of supply, by the CBN. So at that point, what do we do again? So do we allow the currency to, depreciate or devalue again? I think the answer is no. And this is what will bring me to our long-term view in terms of what can we do to the currency. And what I strongly believe we can do is to ensure that, we put in place the required strategies that will allow the country to produce more, and then we have increased consumption of locally made goods and services. By the time we have that, import will reduce substantially. By the time we have that, there will be little or no need to speculate on the currency because what you need, you can get in the country. And I believe that this will be a long-term play, and we cannot fix this until we fix our infrastructure challenges. And I'm very happy to say that the government is on the right track in terms of fixing these challenges, as we now have what is now called the Infraco, which is going to address the majority of our infrastructure problems. If we fix all these problems, then we will eventually fix our FX challenges for the long term, and we will continue to see stability on the of the Naira, as we see it in global economies like the US, like the UK, and even the UAE, for instance. So you wouldn't see enormous volatility in their currencies in those countries. It is because they have the right structure. Nigeria can do it, and I strongly believe
just before we let you go, I know you talked about Infraco, which I think have been launched this week or something. What about the short term? Is there anything that can be done in the short term? Because when you talk about infrastructure, those are long-term solutions.
So in the short term, I said what we need is for us to have increased liquidity, and that liquidity is going to come from, number one, the inflows that the CBN is getting. They got $3.34 billion or thereabouts from the SDR, And we are in the market as we speak. The government is in the market.
I think we lost Tajuddin there. It would be nice to know what he thinks we can do it in a short term because, I mean, at this rate, you know, we need to do something fast before infrastructure gets in place. But anyway, thank you so much. That was Tajuddin Ibrahim, Head of Research and Strategy with Chapel Hill Denham, sharing his thoughts. Okay, are you back, Tajuddin? Okay, could you just finish up your thoughts?
Okay, so yes, I said that the CBN is now better, equipped to supply liquidity to the markets because they have $3.3 billion SDR inflow. We are in the markets to issue Eurobond about $3 billion. That speaks to a total of $6 billion. And they have indicated on Friday on a call that they'll probably do $6 billion if the market is that robust. So in essence, we are expecting between $6 to $9 billion inflow to the CBN or to the country from the next couple of days. And what that means is that the CBN is better positioned to supply liquidity to the market, and that should result in stability in the FX rate in the market. That is the short-term solution in my view.
All right, okay. Well, we're counting down today to see the effect of that. Thank you so much, Tajuddin Ibrahim, Head of Research and Strategy with Chapel Hill Denham. And enjoy the rest of your day.
Sure.
So let's head to the markets now. Talking about markets, Will Ibong is standing by to give us a review of activities in the market last week. Hello, Will.
Hello, good morning, Ini.
Good morning.
Just like Tajuddin was saying, last week the federal government began the roadshow to raise about $3 billion at the international capital market, and like you said, it probably raised up to $6 billion. And they launched virtual meetings with local and foreign investors on September the 17th. That was Friday, and next meeting is scheduled to hold today. And this is supposed to boost our FX liquidity. The last time this happened, when they held the Eurobond sale, was in 2018, and this is the first time the federal government will be welcoming participation from local investors for the Eurobond issuance. This may have influenced the positive sentiments we saw in the market, in the forex market, as the total turnover of transactions for the week ended September the 17th stood at over $1.3 billion, representing an increase of about 55.47% from $876.91 million recorded in the previous week. At the investors and exporters window, which is the FX spot market, a total value of $793.04 million was traded, and when compared with the previous week, this is an increase of 52.28%. At the NAFEX window, we saw the Naira fell by 0.17%. This is against the dollar to 411 Naira 95 kobo to a dollar, and representing a 70 kobo loss when compared to 419 Naira 25 kobo that was recorded in the previous week. We'll move quickly over to the equities market there, where we also saw an uptick in the performance there. The all-share index was up 0.06%, while the equity cap was also up by 0.05%. There were mixed sentiments in the market, but the overall turnover was negative. And also for the sectoral performance, we saw a negative, it's a sea of red there. The banking, consumer goods, industrial goods sector, and the counters were all in the red. But to give us more insight about what's happening there, we have Rotimi Fakayojo, a stockbroker at the NGX. Good morning, Rotimi.
Good morning.
Rotimi, we'll just jump right into it. The stock market was quite choppy last week. We saw that the key indexes, the banking, consumer goods, industrial, oil and gas were negative. They all closed negative, but the market ended positive. There appears to be no clear trend here. What's driving this?
Well, I think what is happening in the larger economy, we can't just be taken away from the Nigerian exchange, which is a barometer for the measurement of economic performance. There is a lull in the economy, and that is already known to everyone. And but the rate at which we are having that lull is what is giving a concern. We keep seeing that the weekly turnover in the market keeps going down, and also the monthly turnover. There has been a month that we had about 243 billion turnover, and presently we are trading at about 70, 80 billion per month. So it's quite alarming. And I think for the performance of the market, I believe 0.06% increase can still be pari because there's really nothing much happening in the market right now. All the results expected have already come in, and there's really nothing much to excite the market. But I want to believe strongly that investors are wiser because they believe that the financial year-end results for most of the good equities will still remain good, and so many of them are holding on to what they are having. So we are not really having much of new entrants into the market, but for those who are already there presently, I think they are holding on to what they have, and they believe that whether the storm that the market is passing through now.
Another reason that analysts are giving for this could be the possible low performance participation in the market, could be the Eurobond that was issued by Access Bank, which was oversubscribed by about $1.6 billion. Would you agree with this reason that that's why we're seeing a low participation from investors? And also the situation with the FX in the country, do you think that would have made investors trade cautiously?
Well, for the instrument that Access Bank created, I don't really think it could really have that impact. But because it's just a stock in the market, and though their performance is good, but at the same time, I don't really think it will negatively impact on the market. But I think for what you've mentioned, the FX is really a major issue because we are not having foreign portfolio investors coming into the market because the ease with which they can take out their money is no more there. So foreign portfolio investors are really wary of coming around here, and also because of the yield as well. So I think all of these have really impacted negatively on the market. But I believe with more participations of local investors, the market can actually do better and also well sustained with time to come.
Thank you so much, Rotimi, for those insights. We appreciate them. And that's Rotimi Fakoyojo, the stockbroker at the NGX. So, Ini, we're waiting to see what how the local participation from local investors will help boost the FX liquidity and also liquidity in the local and domestic market as well.
Yeah, we're certainly looking forward to that. But like a lot of people have said, it's an issue of supply. We just need to get more products that we can export so we can get the supply, and that's the only way to, or one major way that the problem can be solved. Well, thank you so much, Will. Enjoy the rest of your day. So we'll take a break now. When we come back, we'll head to our London studios where Juliana is standing by. Stay with us. You're welcome back. You're still watching Business Morning. Well, in the UK, the FTSE 100 was bearish in early trade amidst soaring gas prices. We would like to know what it is doing now, if it has changed or is still in the same area. We have Juliana from our London studios to give us the details. Hello, Juliana. Good morning.
Good morning.
Yeah, so early this morning, the market didn't look so good with the FTSE 100 tumbling to two-month low. Who are the drivers, and is it still in the same bearish sentiment?
It is. The FTSE was 1.1% lower, the blue chip index of FTSE 100, and there's a myriad of issues. I think if you look globally, stagnation is one of the key terms that are propping up. The Hang Seng index fell by about 4.4%, and this is all about Evergrande, China's most indebted, largest property developer that appears to be sinking very, very quickly, and because of how much debt it holds and how important it has been over the past couple of years to China's economy, there are worries that it will affect the second largest economy in the world. Closer to home, of course, it's the UK gas crisis, which is a very, very long story, even though the news might seem that it's happened overnight, but this has been a build-up for several years.
And Britain has plans in place to protect markets and consumers from soaring global gas prices. What's the plan?
Well, at the moment, the UK government, led by the Business Secretary Kwasi Kwarteng, is currently in crisis talks with, goodness, a number of energy suppliers at the moment because of these crippling gas prices. Over the past 4 or 5 years, gas prices have surged by about 455%. This time last month, it cost about £42 per therma. It's now risen to over £162 per therma. Not only is this going to lead to higher energy bills, which we know has already been on the cards because Ofgem, the energy regulator, rose that benchmark. So we are going to expect higher energy bills anyway. But now hundreds of firms are complaining that they just cannot cope. They need some sort of government bailout. Some are even suggesting that the price cap, which Theresa May's government put into place, should be going much higher. I believe last week on BizInc, we were discussing about 2 fertiliser plants in the north of England having to shut down because, of course, gas and energy isn't just about heating your homes. A lot of them rely on CO2 and fertiliser, and this leaks into food and shopping on our shelves. So this is a major story here in Britain. It seems to be just another issue, especially as we are getting into those colder months where people do have to heat their homes, but some people are going to have to decide whether they heat their homes or they put food on the table.
Wow, that's a harsh decision to make. Well, UK energy supplier Bulb is in talks, obviously connected to this, to secure new funding. Where are they looking to get this funding?
Well, yeah, this is all part of the same story. Bulb, as well as several others, are in crisis talks with the government. They need more money. Again, lots of this is to do with the price cap. The British government put this in place to protect consumers, but now energy suppliers are saying they need something in place to protect them because they just cannot afford to buy from the depleting services because it costs so much more money. Now, Bulb is the 6th largest energy supplier here in the UK. They have over 1.2 million customers, but there are concerns that if some of the bigger energy suppliers cannot take on their customers and support them, they will collapse, which is why they are having these crisis talks with Kwasi Kwarteng this morning.
All right. Thank you so much, Juliana. We'll talk to you later at 1:30 during Business Incorporated.
Thank you.
So let's move to the crypto space now with Ladi. We had a red Friday, and now we have a red Monday.
Yes, we have a massive red Monday today with Bitcoin losing about $4,000 in early trade today. It's full red, altcoins in the red, Bitcoin, Ethereum, just the stable coins, and a couple of altcoins managing to stay in the green like Atom here. Fear Greed Index is still neutral at this point. It's not yet running to the fear region. Market cap lost about over $30 billion, down by 6%. 24-hour volume traded is $92.21 billion. It's up by 4.95%. See Bitcoin dominance inching up there. It was at 41% before, now it's at 42.74%, showing that some traders could be selling their altcoins to buy more Bitcoin at this time. Well, let's bring in Olumide Adesina now, a financial market analyst. Hello, Olumide. How's it going? Good morning.
Yeah, hello, happy Monday. Yes.
Yeah, happy Red Monday. Yeah. What is going on? Major pullback with Bitcoin losing about $4,000. Market cap now below $2 trillion mark. What's going on?
Exactly. One suspect, the US dollar. If you look at what happened on Friday, we saw the US retail data surprisingly impressive, and that's by almost 700 basis points. So what market is anticipating that the US Fed in the next couple of days, actually the meeting on Wednesday, might also take place in the economy. I understand when the economy is being hard, market liquidity gets tightened, and that's why investors are kind of concerned that they're either moving their funds to the US dollar, and that's why we're seeing across the board good oil prices, metals, the crypto assets, including Bitcoin, and many of these altcoins are suffering pullbacks. But it's left to be seen if Bitcoin will break below $45,000. If that happens, then we could see more pending setups because the US dollar seems to be firing on all cylinders, Ladi.
Right, and if Bitcoin hits that price, you can imagine what will happen to altcoins.
exactly, we will see more selling pressure. And also, you need to also understand that at some point, the market will have to self-correct, because the dollar, surprisingly, despite the fact that the U.S. employment data was not so impressive, we see that other metrics show that U.S. economy still remains on cylinders. And the fact that U.S. inflation is moderating, the Fed might consider that, well, they might not want to tighten as expected, but definitely market liquidity tightening is in play. And that's why we are seeing investors reducing their exposure in the crypto market.
And I see, interestingly, El Salvador is buying the dip at this point, buying about 150 Bitcoin, you know, with this dip. Is this what a country should be doing?
Yeah, but you see, it's a bit tricky because, El Salvador, look at their own positions. I think that they have a long-term view. But for retail investors, the dip might not be really deep, might be deeper than what it seems like, because the erratic thing about the crypto market is that we've seen Bitcoin losing $9,000 in a span of hours. So my advice is for a retail investor not to get too exposed and not to get too excited. The market will definitely rebound, but we don't know how certain it is. So the payout for this week is we'll see what happens in all the central banks in United Kingdom, Indonesia, United States. Any reaction from that, any tightening liquidity in that aspect will definitely affect the crypto market. But then to be seen what really happened. But advice, don't get too exposed.
Don't get too exposed. All right, Olumide, thank you so much for that.
Yeah, thanks, Ladi.
All right, look at price of Ethereum there, $3,181. It's down massive 7% this morning. The volume is also low, about $16.22 billion traded at 8 a.m. this morning. Let's see how my coin to watch is doing. Babi, with that pullback there, it's trading at 8 cents now. It was trading about 20 cents a few weeks ago, but they have some news. They're looking at staking now. Staking has gone live with Babi. So instead of letting your coins just lay there, you could stake them and make more money. But this might be an opportunity. But the market cap is trading at about $1.32 million. Tickers Babi there. Not looking bad at all. Top alts by market cap, we see major reds there. Binance going down below the $400 level. It's at down 4.62%. Cardano had an amazing run, but it's down 8.66%. And Solana, one of these strong movers, and the Ethereum killer there, $143, down massive 11%. XRP down below the $1 mark at 8.47%. Top gainers, we see Silo leading that counter. So it's a really tough Monday for traders this morning.
It is, but I mean, it's just the beginning of the week, so let's be hopeful before we get to Friday. Things will look up and things will turn green.
Fingers crossed.
Fingers crossed. Well, that's it on the program today. Thank you so much for being a part of it. Do remember to join us at 1:30 p.m. We have Business Incorporated. We'll give you an update from the world of business. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.